Welcome to this video on Materials Management, or MM. This module is part of the Introduction to S/4HANA using Global Bike Curriculum. In this video, we use version 4.3 of the Global Bike Curriculum, featuring S/4HANA 2023 and Fiori 3.0. There are no prerequisites needed to begin. This module was authored by Brett Wagner, Stefan Weidner, and Babette Russ. The content is designed for beginners. By the end of this video, you will be able to describe the purchase-to-pay process, manage master records, create purchase documents, and understand key integration points. Materials management includes several key functional areas: inventory management, purchasing, MRP, physical inventory, valuation, service master, invoice verification, and product catalogs. This unit covers the materials management organizational structure, master data, and the core procure-to-pay process. Understanding the organizational structure is vital. This includes the client, the company code for accounting, the plant for manufacturing, and storage locations to differentiate material stocks. For purchasing, we define the purchasing organization, which handles procurement activities, and the purchasing group, which acts as the communication channel for vendors. Here is an overview of the global bike structure. It highlights how the organization is broken down from the global bike client down to specific plants and storage locations. This slide displays the global bike enterprise structure in SAP ERP, mapping out various plants, storage locations, and purchasing organizations. Materials management relies on several types of master data, including vendor and material master data, as well as purchasing info, condition, and output master data. The vendor master record is essential for business with external suppliers. In S/4HANA, it is created as a central business partner with specific roles, such as FLVN00 and FLVN01. Vendor master data is organized into three views: general data, which is client level, company code data for financial accounting, and purchasing data for materials management. This diagram illustrates the data hierarchy. General information is client-wide, while accounting and purchasing information is specific to the company code or purchasing organization. Finally, the material master contains all information needed to manage a material. It serves multiple components, including sales, production, and accounting, and is stored in functional segments called views. Material master records consist of various views. These include data for sales, purchasing, material planning, forecasting, storage, quality management, accounting, and controlling, all organized within the material master. Material master data is structured hierarchically. General information applies to the entire organization, while other specific data is tailored to particular sales organizations or storage locations. The purchasing information record creates a framework for purchase orders. It establishes the relationship between a specific vendor and a material, and can be maintained manually or generated automatically. These info records help buyers quickly identify which vendors supply specific materials. They contain crucial details like pricing, lead times, and delivery tolerances, serving as defaults for purchase orders. This diagram shows master data in use. The material and vendor master data converge with the purchasing information record to support the creation of a formal purchase order. The standard procure-to-pay process follows a structured sequence, starting from a purchase requisition, through vendor selection and ordering, to goods receipt, invoice verification, and finally payment. A purchase requisition is an internal document requesting goods or services. It can be created manually by a user or generated automatically through various planning processes. Once a requisition is ready, the purchasing department must determine the appropriate source of supply. Options include internal sourcing, using a source list, outline agreements, or conducting an RFQ. Internal sourcing occurs when requirements are met by another plant within the company, such as a centralized warehouse using stock transport orders. A source list defines the allowed vendors for a material within a specific time frame. It assists the system in automatically assigning a vendor or presenting a list of valid choices to the buyer. For long-term needs, organizations use outline agreements. These are divided into contracts, which define prices or quantities, and scheduling agreements, which spread deliveries over specific time periods. When no existing source is available, a request for quotation or RFQ is sent to vendors. This invites them to bid on the requested materials or services. Vendor responses are recorded as quotations. In the system, the RFQ and the vendor's quotation are linked, creating a single document that represents the formal offer. Vendor evaluation enables organizations to monitor supplier performance. By scoring criteria like price, quality, and delivery, companies can make informed sourcing decisions. Finally, the purchase order acts as the formal, legally binding request to a vendor. It can be created manually, referencing other documents like requisitions or quotations, or generated automatically. A purchase order is used for various procurement purposes. The item category, or procurement type, defined in the document, dictates how the order is used and the specific process it will follow. The structure of a purchase order consists of three main parts: the header, which contains vendor and currency information, the item overview, and specific details within the line items. Once a purchase order is created, the vendor must be notified. This can be done through various methods, such as email, EDI, or XML. Several forms, like order acknowledgements, can also be generated. This diagram illustrates the process of goods receipt, showing the flow from the initial purchase order through to the notification of the vendor and the subsequent shipment receipt. Goods receipt is a movement where goods are accepted into the system. It references the original purchase order to ensure accuracy, updates inventory and GL accounts, and records the event in the PO history. Goods movements are represented by 3-digit movement types, such as 101 for warehouse receipt or 122 for return delivery. These types determine how inventory is updated and which fields appear during entry. A goods receipt triggers a chain of events. A material document and accounting document are created, and both stock quantities and values are updated, along with the purchase order history. In invoice processing, incoming invoices are verified against the purchase order and goods receipt. Discrepancies in price or quantity can lead to warnings or the system blocking the invoice from payment. When an invoice is posted, it confirms the liability for the received goods. This updates the material master, creates the necessary financial accounting documents, and enables the payment process. Payments to vendors can be processed automatically or manually. Key elements include the payment method, bank selection, calculation of the payment amount, and the generation of the financial accounting document. This slide details the account assignment for goods receipt. It shows how the system automatically debits inventory and credits the GRIR clearing account, reflecting the accrual process. At the invoice receipt stage, the GR/IR account is cleared. The system debits the GR/IR account and credits the vendor accounts payable, correctly shifting the balance to a formal liability. During the final vendor payment, the accounts payable is debited and the bank account is credited, effectively reducing the company's cash to settle the outstanding debt. This final summary displays the key integration points between financial accounting and materials management, showing how the ledger entries flow through goods receipt, invoice verification, and payment.